Welcome back, it's the Crypto Sniper. Yep, what are we looking at? So, how many times have I put this chart in front of you? Well, a number of times, because the understanding the dollar and what the dollar does next is empirical to understanding timing and making your best decisions on how things are going to pan out. We have put forward this falling wedge scenario a number of times, and it continues to comply. So during the period of the last 3 or 4 years, we've spoken of the dollar index in a breakout state on a falling wedge structure. It's a 3-impulse falling wedge. Most of you got this, and this is the huge first impulse, second, third, squeezing lower. Remember, this is largely measured against Western nations. There's a bit of yen in there, but it's pound, it's Swiss franc, it's the euro is the big beast in here. So this is a euro failure chart. Up means euro failure particularly, and relative, I say relative strength because it doesn't mean dollar has to be the most strongest currency out there. And this is a channel that we've drawn. It's not a major melt up such as you might have argued occurred in the early 80s over here under Faulkner, that huge run up. For example, let me do it in blue so it stands out a bit better. That was an absolute runaway of strength because he choked the inflation. Isn't that ironic? The super high prices of gold, that was part of the late 70s into the early 80s range. And in silver, of course, Faulkner was someone who got serious about closing out inflation. Contrast that with today. Oh boy, big difference. Anyway, super macro, major melt up of real strength. This, as a channel that we've drawn, does not represent the same degree of momentum and allows plenty of time for a little bit of chopping about. But this first structure in a new trend gave you your breakout of your wedge. Your return moved a number of times to this as a basing descending grind line that you were supporting on. That formed a falling wedge that set up the next largely mini period of dollar dominance that came in around 2018. Up, she went, topped out in the great COVID crisis that ended up with a subsequent printing of 7 trillion that led to a sell-off. Now we already, round about these points, were updating you regularly on the fact, using this very chart, that we felt that this period right here that you started to fall was going to lead to what we call the relative low 2 structure that would not run that low 1, and then you would begin a journey back up in terms of eventually creating a dollar index structural squeeze that represents something like this on the way for an up leg move that will involve some degree of pullback at a point and then a strong upside move, much like the orange line we've indicated. We've said to you, we felt that the 110 will run, and that this up leg alone, before you get some form of correction, will run the 100. Dixie 100. Dixie 100, dollar index 100, major key level of significance. There isn't a more significant number in terms of this metrics for measuring what's largely European clutch of currencies against the dollar. So we should have that in, and normally we draw with a nice big fat blue line, Dixie 110, bring him down to 100, and there you you got him. So let's put him in and we'll set him straight so that he's at the right value. 100. Thank you. That is such a critical level. So this is a super macro. By the way, what time frame are we looking at on this chart? I didn't detail that, so let me just make this very patently obvious. We are on a bi-monthly. This is how you get data back from 70s, guys. This is bi-monthly. This is a 50 years of history. And the bigger the charts and the bigger the patterns, the more reliable they come. They aren't formed by chance. There's not a whim on some politician's statement, some Fed chair's statement. These are big macro trends that rise and fall. So the big moves are determined, stable, long justified moves. And this is a failure of the euro for me. largely. And we've been the big talkers of the failure of the euro, and that even though you made the head and shoulder on the euro USD, you will trade lower. So let's just focus more on the near term and what we've said. This scenario cast that we drew some time ago says eventually you make an up and over for that 100. So we want to see that 100 run, and I'll tell you why. Then we expect some degree of a pullback before breakout to the upside, which would be the technical compliance to the patterns that we've identified, that being a squeeze. But it's quite common that you first get a little bit of a down leg tug. You may not get much. In short, we may already be in the breakouts. Inside our community, we've already discussed that scenario. I'm not going to break out that detail down, but you can go to themarketsniper.com to become part of us. You may already be in a breakout. So the assumption that we get a rest after the 100 is subject to how clearly we are already in a breakout, or are we just making that relative third high. I'm going to be showing you a lot of levels that were formed around here that involved the events of March 2020, and that super skittish rickshaw boy candle, that's the long wicks top and bottom and the small body. That fella, oh boy, was there a lot going on during those times. I think many of you remember. It wasn't that long ago. It feels like a lifetime, and yet it feels like yesterday in the same time. That crazy sensation of time. So let's go in and micro dive into this. But I wanted you to understand this is where we are. A general, consistent failure of the currencies that are being measured against the dollar. Mainly Western, other first world nations. So, you've got euro, you've got GBP. I mentioned that there's yen in there, and we're going to come back to that because we've touched on that in our 6 macro trades. Why? A huge indebted nation with terrible demographics is going to lose out, particularly to commodity nations, but also to the current world standard for now. Albeit that the dollar is doing everything to lose that status in a perfect sense. So let's do that deep dive, and let's go into the shorter time frame. So we're letting go of that dual monthly, and we're going to look at the shorter time frame. So you were looking right there at a bi-monthly chart. That's pretty big. It's pretty intense. Let's take you to a weekly, and let's initially just turn the eye off so you don't get blown away by all of that you were seeing. So this is in essence the events. That was that rickshaw boy at one point that you're now seeing a bit more of the detail, the huge volatility of the running into the dollar and then the subsequent print that was going to be huge, that brought it all the way down. Now that was a first inverted in a new trend. When I say inverted what? Inverted HVF. HVF method is what we trade the squeeze, down, down, down. Overperformance is expected because you are coming off a localized high. You've got a slap in the face, boom, you're going to have a first structure in a new trend. Wow, that's going to lead to overperformance, and overperformance it did. We have special methods. You can learn how we do that determine when the overperformance period is over. Instead of just taking your normal target that you would on a structure that is geometrically determined, you actually can let this one run and run and run, and that exit would have been there, which would have been substantial. You would have got out in and around the 99 level, and you would have seen it almost down to the 89 level. Very, very big moves in the dollar devaluation. Right, let's bring those annotations back in, because you probably would have seen that there were a number of draws. We drew necklines here, and we also drew a slightly smaller neckline across there as well, where that could have been inverted head and shoulder with a slightly cranky one. But the main one of interest is this one, that head and shoulder, and that as your right shoulder. So we would rub those two out and go with that. You will see both scenarios, so it can be overwhelming. This is a hard-working chart. This is one we look at often and regularly. Why? This is going to answer questions on your gold, silver, Bitcoin, Robusta coffee up, commodities up or down, USD, JPY. Everything gets answered if you understand who is going to be strong when in this chart. And at the moment, We have been accurate with this. We aren't accurate with everything, but in this instance, it's been one that has served us as a model exceptionally well. And the more you get valuable feedback and the more it keeps on keeping on, the more we stay with it. In other words, if it's doing what you think it should be doing and it keeps validating your scenario, keep expecting it to do exactly that. So I'm going to go to, let's tighten this up a bit. Let's get 3 days so we get a little bit more detail. And just go again over. So this was that first inverted in a new trend. Now, I want to highlight something. This lays down, when you have a breakdown over here, this lays down a thick seam of resistance. We couldn't hold that. This is now a major box of resistance. We've highlighted this many, many times before and said, okay, that is something that needs to be run for the dollar to then be in a potentially bullish environment. How do we break legacy funnels? They must be broken with momentum. They must typically be broken with momentum. They are like fences for a horse. You don't just walk up to it and jump over it. You typically take a run at it. And that is what I assess has been happening, and we'll come back to that in a moment. So here is this big zone that we are marking out as a critical zone in this pair. And that was the sell-off. Now you've got a couple of necklines there. In fact, I'm going to make the one, my most favored one, the fatter line, which it isn't at the moment. I'll make that little guy slightly lighter. So this is the red draw. That is your left shoulder. We've covered this many times. Left shoulder. This is your double head, and that is your tiny right shoulder. We like to see tiny right shoulders because it shows the relative strength, and the willingness to dip down was gone. Since this period, we have asserted that you will go from these levels of 94.5, keyest level of significance, that was run where you have armpit 2, armpit 1, and the beginning of your shoulder and the end of your shoulder, which was your triggering event for the structure. All the way that target took you to, can you believe it? I've hidden it in all those purple lines, pink lines, but essentially in there, let's go with the blue head, which literally implies you will smash this legacy resistance before you rest, because it takes momentum to jump the fence. This entire setup, this entire reversal pattern structure, ladies and beautiful gentlemen, or should I be saying gentlemen and the beautiful ladies, lest you think this is a closet moment. This entire period has been July of 2020 all the way through to literally the end of 21 in setup. It is a substantial based reversal. And by getting that high, it's likely that you will bump against this funnel, regurge your loins to gather the strength, and then smash it. And thereafter, that will serve as a rest point where you will slump back down a wee bit before going higher. So we aren't turning bearish on the Dixie because it runs 100. We're just saying this momentum period will continue till, in our opinion, the 99.975, which is our is run, which literally is the 100. And the 100, you're going to get a surge past that. It's going to be a psychological event, and you may even get a blow-off run. So when the horse runs to jump a fence, he doesn't stop dead the minute he's cleared the fence. There's an inherent momentum that carries you through. He's crossed the fence. Everyone, panic buys, retail panic buys, everything like that should and likely would happen. This leads to this upward move. Note how the upward move was triggered over there, went up nice and strongly, and then had quite some rest, and you ended up with a pullback, and everyone was like, what's that with your, your Euro USD short? You aren't any good. No, necklines are often revisited. We had the same on the head and shoulder of the Euro USD. The neckline was very close to being revisited. And then you were skittish again. Oh, it's not working. He's wrong. It doesn't matter about wrong or right. The market will do what it does. But since then, you went really strongly there. You formed a bull flag with a number of ups and downs. We'll look at that on a lower time frame. And now you are smashing it. And that, my friends, will run the 100. Now why is this so important? I will be splitting screen in a moment, and I will be showing you how this is so relevant for Bitcoin. how Bitcoin suffers when the DXY is too strong, how, of course, the Euro Swiss franc falls when the dollar is strong, and how obviously the Euro USD falls when the dollar is strong, and why gold has been held back a little bit by a strong dollar and even oil. So at the moment, against that basket of currencies, again, the dollar hasn't been universally strong against commodity currencies, against Chinese yuan and many others. We're talking about a select group of uglies. It's the least ugly in a group of uglies right now, which is not the full set of international currencies. And in fact, we've made the case that a number of quite flawed nations that are commodity currencies are actually doing rather well against the dollar, such as the South African rand, the Brazilian real, etc., etc. Okay, so now we cleared the deck. This is an inverted head and shoulder. That target for that is 99.79, and we suspect our funnel run on our legacy inverted, which was a super performer, so it's highly validated, yes sir, will occur with momentum, and that is exactly what's happened. After running into it, we bounced off a number of times. Let's have a look at that detail a little bit closer. So out of the 3-day, I'm going to take you into the daily chart. So now let's just capture this run up from the head and shoulder, how it's played out. There it is, the run. Come back, come back, come back, wind up, squeeze higher, almost like a rising wedge, squeeze higher, then surge right the way up. You are now in our funnel zone. Let's again just put that box on once this time, just to show you. There it is. You made it in and you got resisted. You came back off, you got supported. That was a legacy target. A legacy target from where? It was the target of the inverted key levels of significance. That was the major overperformance. That was your geometric target, even though you would have held a percentage of your stake for overperformance. It is a key level of significance. It served as support. It served as support, it served as support, served as resistance, served as resistance, served as resistance, and then you break and now you finish. So the horse had a couple of false runs and realized you can't just clear this fence with a 3-step run up. You need a 4-step run up. No, that's not enough. You need a 5-step run up. No, that's not enough. Okay, I'm going to go 20 steps back and I'm going to come at full tilt. Righty ho. Now you're really committed and now you're really motoring, and the key level will fall of 100, which is probably sitting right under that USD sign right now. So this is where we are. This is of course known as a bull flag, a flag of bull, a flag of bull. And this has been why a number of things have been slightly lethargic recently, including Bitcoin, which has been unimpressive. And this surge period right now has been damaging. And I will demonstrate that on the BTC USD, on why gold and silver pull back reasonably since a nice surge up. All of that is happening because of a little bit of dollar strength and weakness in the euro. But enough of it, and those things will eventually triple over, and you will get that event where Bitcoin, gold, silver are going up even on a firming dollar. Because in the long run, we expect this chart to continue higher and run 110. Remember, we showed you that target on the bigger time frames, 110. Don't make me go back there. You can see it. Go back and watch the macro charts. So what are we actually saying? After running the 100, let's just get that 100 into view. We've got to put a big blue line on it. Let's go back up to the monthly just to put a big, oh, we did put a big blue line. No, we did it on the other chart. Big blue line for the 100. Let's do it, let's do it, let's do it, let's do it. 98, 99, 99, 99, 99, 99. Here she blows. Big dark blue line on the 100. Stick him in there. And let's also make sure it's just 100. We don't want any 5s anyway. Okay, back down to our 4-hour. So here we go. Here's this bounce around. Here's this bounce around in the flag with our splitter over here. We even had a little squeeze. We said you're going to squeeze to the top end of this again. It made its target and then it died back to the bottom end of it again. Then it came all the way up again, bouncing and a little bit of resistance. It's like, you can't make this up. A little bit of a continuation pullback right there on the technical side. Whoop, before we started to go. And what's happening here? We warned our guys on the lower time frame that you're actually getting an upside wind up on the dollar. There you go. What's it aiming to do? Well, you see that 99.975 and 100. Those two lines are absolutely conferencing. We have a date with destiny for that run. And in case you think that's not a brave prediction, it's virtually there. Don't forget, we gave you that way down at 94.5 on the neckline saying this is going to run 100. Then what happens? You will surge through 100 and everyone will go, dollar strength to the moon. That's when we get our first blow off and then pull back and sit on the support. That's when things calm down. Now at that point, your gold, your silver, and your Bitcoin will start to get a little bit of a bid again because there's no longer further upside, but they can get a little bit squeezed when this occurs. How high might it go? I don't know. Will you make 101? I don't know. Could you make higher? Maybe. Could you just make 100.4? Possibly. Could you make 100.1 and die? Could you fizzle just on the 100 and have quite a deep fizzle back and bounce on the roof of your bull flag? Quite possibly. Anything is possible. How hard might it rest? Only time will tell. There's key levels of significance. We picked up another funnel there. It was interesting to see that. Just run it and then pull back into it before surging. You see it over there. So we will see what the market gives us there, but the prediction is 100 will be run, and then after some degree of rest in what will later turn out to be a journey higher. Now this is not a dollar bull call. Many people get angry. Oh, you're a banker. No, I'm talking about the least ugly of a group of uglies. I don't want to be in dollars. I don't want to be in any fiat. I want to be in things that go up relative to fiat. I want sound money. I want everything. But looking at what the FX pairs and what it's being measured against is going to be critical. So let's just have a look at that relevance of the dollar to, say, the gold market. So while we're here, let's just make sure we're finished with the Dixie. Is it coming? When will it come? It's squeezing higher. I think it wanted to go here. I think that was a little bit of a break and feign back in, and now it's working its way. I think this is coming very, very soon. And this will be something we predicted a long, long time ago that's very close to its fruition. By the way, the original target of the inverted head and shoulder was met. That's the first time. That target closed. So actually the technical pattern has already performed, but you're going to likely finish the job of getting around this funnel that started there and ends there. You're going to smash it because that's what the horses do. They don't you can't stop in a halfway moment as you're flying over a fence. You finish clearing the fence. That's kind of how it is. And the big 100 looms as well, which is such an important technical level. And many people will have 100 in there, and not everyone can get filled at 100 if they're trading the Dixie, so you trade through it. So there's often vacuums in terms of volume by price, bids. There's not many big bids at 99.997. Everyone's just going to put in 100. It's the law of round numbers. You get drawn to it, and then not everyone gets fulfilled in it, and you can trade through it. Okay, so that's the Dixie. Now, what's this talk about the Dixie's relevance to the likes of Bitcoin, gold, and other things? Well, everyone forgets these things are still measured in dollars. So if we take a look and we split the screen, let's bring up a couple of our favorite alternative assets. The Dixie's on the bottom, so I will get a cleaner chart and let's go gold so that you guys can have a look. Our gold bugs. If you're a gold bug, go hit the like button right now. You want to see gold succeed and go up, go hit the like button right now. If you want to see silver succeed, go and hit the like button right now. Puppy licks to the face, please. That'll do me just fine. So that was 1 day, so we've got to put everything on the same time frame. So again, this is silver. Now what you might notice, I'll just reduce some of my clutter of my shorter time frame analysis, which is largely angled and can be removed. You see we had a little head and shoulder there. You came down and you visited it. This is just micro analysis on it, by the way. I'll just show you that quickly because it was kind of fun and we haven't done something on silver in a while. There you go. You can see that little head and shoulder. Where was it? On our perceived just-in-time level. Left, blow off, head, squared up, right, target, made. And at no point was it invalidated. Right shoulder is the target. So that got done, but now it's easing, marginally lower lows, slightly broadening structure. This is something that's going to start getting a bid. And it's kind of dealing with a period of dollar strength. Let's go back to the same time frame so we can compare like for like, dealing with dollar strength. So we're looking at the daily. What's happened? Now what I want to show you is if we put these periods directly under each other. So I need 2022 to be at 2022, there we go, and this is roughly there, let's put it there, April the 18th, 2022, let's stretch it out, there you go. So 2022 is under that, April the 18th is almost under that, let's get it a little closer, there we go, we're kind of right. I don't think I'm going to do any better, guys. So what's actually happening? So during the period that silver was trading up, there was a spell where the dollar was up for a little bit as well, slightly. Then the dollar spiked higher and started a run as the metals did. And round about March, the metals battled with the dollar running up too. So there was a spell there where they both were up. That's a very abnormal situation. The dollar held strong and at these high levels, significantly higher levels, and metals seeped back. Now recently, you can see that from this day over here, just before April, it's been non-stop up, and that period has been largely bearish, but not overwhelmingly so. So actually, we're getting a falling wedge structure. This is looking bullish for silver. And it's going to come at a point just after, soon, a 100 run and a pullback from the Dixie. So in my opinion, the Dixie goes through this. This will keep this in the wedge for a while. When it pulls back and rests for a while, the silver and gold will resume a little bit with upside. But remember, I didn't say it's going to rest forever. So it will rest for a while. So you can see that this period, let's go check these dates and show you. There are moments that the correlation doesn't hold perfectly, but those high, 7th of March, 7th of March, 8th of March, it was too high and the dollar was now leaning on gold. It caught up this move up, took some of the sting out of gold, and gold couldn't continue to go up on this high dollar. Started to rest back down. Then now we're getting the 31st of March. Let's go up here, 31st of March. You were there and now you're trading down to here, but that's on quite a big dollar move, and slowly the gold doesn't care anymore. The gold doesn't, oh, this is silver, sorry. We're doing both precious metals. I chose silver in the end. I don't know why I normally do gold first and silver later, but the silver doesn't care anymore. So it has got a good base. That's a nice little hammer. You will break out of this falling wedge to the upside, in our opinion, on silver, and it'll be further supported once you get a minor blow off in the dollar index and then a rest back into this funnel once you've run the 100. This is going to be a telegram moment. All the headlines will come. None of the people that will be reporting it called it at 94.5 like we did here on this channel. None of them did. They'll be all, yeah, dollar to the moon against the, da-da-da-da. Just about in time for the first rest that it will take. Kind of like what happened with the oil. Anyway, let's have a look at another, let's while we're in the precious metals, let's get up top here. We'll get gold, which was who I was originally choosing to get in. Again, see by this advance in the dollar, whilst gold was advancing, how it subsequently caused a correction. So into a low over there. What date was that? Well, we get it for you. Gold, 16th of March. When were you 16th of March? You were on the high side. You'd already been on the high side. You'd already surged up. That's now forced that into a low because you've gone largely up, a little zig and a little zag. So that's what the dollar did. And you're on the high side, and that's what it did to gold. Initially, they ran at a moment where they were running together because there was so much momentum in gold, but eventually that strong dollar caught up and it corrected back down. Then the dollar eased into the low there. What happened? The gold drifted a bit back up. But then the dollar got strong up top here. What happened to the gold? It had a down. Now you're actually, for the last 6 days, so we're not yet Friday, we're Thursday today, he says, thinking Thursday, yes, 6 days. So this takes us all the way back to probably Friday of last week. You've gone up once, twice, 3, 4, 5, 6 days. What has gold done since then? That was your 31st of March. What has it done 31st of March onwards? Well, it's actually held its ground. It's actually held its ground. 31st of March, okay, was a little bit up. A little bit down on the strong day. Indifferent, slightly up. Indifferent, slightly down. Indifferent, slightly down. Indifferent, slightly up. So actually, it's held its ground. From the 1st of April low, it's actually higher than the 1st of April low. In the meantime, the dollar's been higher. The dollar's gone from the 1st of April there, and gold has not been driven lower. That actually means dollar stronger and gold still holding its own, normally in an adverse relationship. But as I say, you have these overlap periods because the dollar came on strong late here, and eventually it took a while before it brought the gold down. So there's some lags sometimes in this. So that's gold and silver. What about other things? What about other things? Well, we've had oil get a nasty smackdown with the Fed committing to... So there was things that happened last night, guys. There was things that happened last night. Let's put the eye on and rest. You can see again, if we just move this fine fella like that, you can see again that we started getting dollar strong. You could see there was runaway strength in oil in the beginning of March, but the dollar then caught up from the back end of March and surged into its high there. That coincided with the peak of oil, and oil came strongly down. The dollar remained in range with zigging and zagging. Generally, high point here. What does it again? Get that date. 28th of March. Where was oil 28th of March? It started the day there and it's traded net down. So oil has come all the way down to there in the 28th of March, which coincides with that move there. It makes sense to me. Does it make sense to you? Yes, it does, because the currency that you're in is obviously appreciating. So this is determining it. But there's now hammers and bids, and I think, even though it's a very flat bottom, I think you will get a push up out of oil coming. And actually, it's potentially a very good entry, and you might even get away with a stop right there or at the bottom of your hammer. And I think the upside, first you go up and over a little bit, maybe come off again, but you might set up a nice winning squeeze again, and you could go higher on oil whilst the dollar rests. How long will it rest? We don't know. How long's a piece of string? But it could be start going up while the oil could start going up while the dollar has its final little blow off above 100 and clears those levels. A rest will be needed, in our opinion, because you will have then done quite a lot in a very short time frame at that point. So that's, again, oil selling off during this period, but slowing in its rate of sell-off to the point that it's eventually going to go up regardless if dollar has a mini blow-off, and then when the dollar slumps, it's going to get a further wind in its sail. So what about the likes of other things? Let's just take agri for fun. Again, you can see in the last few days, Robusta coffee, that's it, make sure it's on the daily, has softened, but is in a broadly strengthening environment, So when the dollar went sideways in the flag, it went up, and now that you've gone up, it's largely gone down. You can see that adverse relationship again. So it's pretty simple stuff. It shouldn't be rocket science. Many of you are nodding your head. So understanding what the dollar will do next is pretty useful for your commodity entries. Now is a great entry for gold and silver. It's potentially a good entry for oil, and it could be, although I'd like to see more evidence of a bid coming in here on Robusta, a potential agri entry for things like Robusta coffee and or others. Let's just have a little side shimmy What's been going on the debt markets? Well, you know me and the debt markets. To me, we are in a head and shoulder on TLT, heading for a low. We keep gapping open and trying to trade up. Lots of gaps on TLT. Most of them don't get closed, by the way. Some of them do. But gap down to here, traded part the way up. This is meant to be a little bit of a hammer, but there's no real conviction. The dollar strength is not leading to fresh bid into bonds. The 20-year ETF is not going up. So if money is coming out of, say, the euro, which is our default guaranteed currency of great failure, along with the yen, if those currencies are surrendering and selling off and assets are being sent to America, they aren't going into, for example, the iShares 20-year bond ETF. And if it tracks the 20-year debt or it's a portfolio of 20 plus, 20s and 30s, why is the dollar being bid up? Where is that money going? It's not going in debt markets. That's our opinion. So actually the dollar strength normally would lead to, especially in fear markets where there's a lot of uncertainty, and if there isn't a lot of uncertainty for you now, I don't know what it will take to bring a lot of uncertainty. Why is money not going into the debt markets? It's the end of the debt cycle. People are afraid it's guaranteed losses. This is where I differ very strongly from Raoul. We have a lot of opinions in confluence, but in truth, this is one key one that I feel you always feel you're more accurate on something that you have an opinion, but in this one, I think we are. I think we've got it right. I've had a Twitter exchange with him before. For example, on this particular market, it was the TNX, and we said, no, it was the TLT actually. Let's just put the drawings back on. That's it. We'll go to weekly. The first time we disagreed on the direction of the TLT was up top here, where Raoul felt that we had an inverted, a highly ascending inverted. That was a slap in the face, so we saw this as the first in a new trend, but highly ascending, which is very misleading because most people think this is up. And Raoul was saying, is this not a good time to be buying debt again? He liked calls on that. That was that point right there. And we said, no, it's going to go down and it's going to bounce here. We scenario cast this whole thing, and then it'll give a right shoulder. It ended up a much bigger right shoulder than we expected, and it went higher than the smaller left shoulder. We said, but eventually it'll come back down and trigger what is a head and shoulder, and it has. And it has. So this is the second time he was tweeting about calls for debt. And it's the second time we're taking him on the opposite side of that trade. We think this is a triggering event. Can you get a return move if the dollar weakens or if something happens that leads to money going into the debt markets? I still think it needs dollar strength for that. And we're even seeing that with this dollar strength, it's not leading to a bid on debt. You can still get a return move like you did on the inverted head and shoulders of the other. But this is, for us, the death knell, the end of the 40-year cycle. Many people have called it, and almost all of them have been wrong, but eventually it happens. And we are calling it for the first time, and so far we've got endorsement for our opinion of calling that a short. That HVF target was made there in the end, and we think overperformance will come. And by the way, it was very difficult to call in inflation. There was no inflation numbers of any scare. There was all deflation. It was all post-COVID. This was all the June, July period, and in May already we were saying this is probably a down. So that's turned out a good one. We got a lot wrong, but that one I think is still a good one, and I think this will be a good one too. So if the debt markets are failing and the dollar is going to go up, why would the dollar go up? Well, the euro is failing further. The euro is failing further. So as a reminder, our favorite one to fail is the euro, and in terms of in the Dixie component, let's have a look. Oh, I haven't done Bitcoin, by the way. Before I leave the debt market, let me just put Bitcoin in there, and then we'll come back to the euro. So let's put the other risk-on asset that's being categorized. So even though it should be doing swimmingly in an inflation world, what's been going on? So again, we need to get the daily on here. I'm going to switch the eye off just to release that. Now you can see, again, if we get these guys under each other, whoops, that's maybe I went a bit big there. $2022, it's pretty tough lining these things up. I'm pretty sure there's a smarter way of doing it. I think some of you have even told me, but I just don't know how. I forgot. Must be better. Ooh, that's why we're having a problem. I'm going to pivot out of Bitcoin like this. There's 7 days versus 5. That's why we're having a problem. And I'm going to take the Grayscale Bitcoin Trust, because that only trades 5 days of a week. Okay, we'll get it right this time. I was like, these things don't line up. These things don't line up. Silly boy, silly boy, silly boy. Okay, so that's April and May lined up, and 22 and 22 pretty much lined up. So what's happened here? So during this flagging period, Bitcoin kind of was basing out, but when it was super strong, this blow-off leg, you can see Bitcoin suffered. Then we had dollar go down, Bitcoin went up. Then we had dollar snap back up, Bitcoin went down. Then we had dollar go down, Bitcoin started a long climb during that dollar down. And even though there was a bit of weak dollar climbing, it overcame that. So it had a little bit of relative strength. That was the FOMC. And then we went down again on the dollar into April. And then Bitcoin started to look a little bit overcooked. What then happened in the last days of April? Dollar strongly up. Bitcoin looks a bit jaded. So you can again see that adversarial relationship that is stolen, and there's not that much independent real zip. We were the ones that thought this could be a downside break, and we expected the dollar strength. But there was enough inflation. Jay Powell did so little in terms of inflation, with just a quarter point, that Bitcoin got the inflation bid. So it actually bled out of this instead of potentially breaking to the downside, all while this is going on. So what's going to happen as we go further up in the November? That could lean a little more on Bitcoin. But that'll only happen on Friday, then you'll have to wait for Monday. So over the weekend, who knows, it might drift back up, Bitcoin, or it might assume a bit more dollar index upside, and it will go. But you can certainly see again the relationship. This has been one that was trending up. You had a long continuation pattern, and this continuation pattern then was a sideways movement that led to Bitcoin starting a sideways movement. Then dollar went up. It started to lean on Bitcoin quite hard, and then we went into the flag. During the flag period, which is essentially a pullback, this drifted higher. And that's because of the weak response to inflation. So risk limited number of token items that can't be expanded beyond there by decree. You can't print commodities, agris, oil, and gold. And in the same way, we believe they won't expand the number of Bitcoin. As a result, Bitcoin drifted up on that. Now dollar asserts again, and now we're seeing that downside. Okay, so that was a couple of things. So then I said I threatened you with the euro, so we're jumping around between cryptos and a lot of things. This has led to a lean. If Bitcoin is off, then it has a knock-on effect to the alts. And that is one of the reasons why we're encountering what we're encountering. So those currencies, Euro, USD. So I'm going to snap out of the split screen now. We've pretty much proven, I hope, that the dollar index matters to these risk-on, risk-off currencies. We've looked at oil, we've looked at gold, we've looked at silver, we've looked at Bitcoin. We've seen a number of things. We looked at Robusta coffee, which is a randomly selected agri. these things matter. So if we go back and we have our charts back on, again, like our Dixie, that's a performed target that was made. We've given you two performing targets. This is a 13.72. By the way, we invited those that watch the channel to be short a lot higher up than the neckline at 118 with a risk stop over there. That has performed. You got the same trade on the Dixie. You could have traded it either way. You got the same outcome. They're highly correlated, obviously. They're not exactly the same, but they're highly correlated. So what do I expect to have happen? I expect this to actually stop going down after the run. So it'll have a final spill as we do 100. It'll possibly push, it might push to low, but I don't think this low is run. It might be run. It might be exceptional Friday for the euro. It's a pity if it is run, because I want it to set up for us a beautiful structure like that. But it's what I want and what it'll do, two different things, as you know. But that would give us a great opportunity for fresh shorts on the euro later if we got a nice run and then a bounce here on the euro before a further spill, something like that. So those are scenarios that we are playing with. This is a beastly spill in the euro. A beastly spill. Rising wedge failed, basing ascending grind line, boom, boom, bosh, down she goes. You can see the confirmation of the failure here. We've continued to say these rallies should be shorted as you approach the broadening structure, which was downside continuation that saw you spill out of there, eventually seeing the parity run on the Euro Swiss franc. So the Euro Swiss franc is also one of our trades, a little bit less overarchingly dominant because the Swiss franc is not outperforming the dollar yet, but it may have a spell where it does. But overall, a spill, a spill, a spill. This ran parity, which was a key level. So there's a lot further to go before it challenges doing that again, but in time, it's our expectation it will. So the Euro USD short and the Euro Swiss franc. This, by the way, have a look at that risk reward, 85.8. Good luck to you, plus over performance. That one is still very much in play, and you should have got in from October last year, just at the back end of September actually, when we did our 6 macro trades for you. And that will require a major capitulation of the euro against the Swiss franc. The USD DKK, for example, the Danish kroner, very much fixed against it. Again, we expect up, but that little final push in the Dixie is going to push this higher possibly, and then a little bit of a slump. That's what we think could happen. Could it just blast this high and keep going? Yes. Could it go a lot longer before it rests? Quite easily. This will all be seen on the Dixie as well as it would on the DKK. The Danish kroner is, of course, broadly pegged. During that period, we've also gave you the USD JPY. Understandably, Dixie goes up, this goes up. This has been great trades, many structures. You would have been, if you got in late, just at the last moment, just in time, you should have been long at 110. You would already be at 124. 124 in a very short time frame from September through to there. That is a huge, huge move with little wind-ups to invite you in for a bit more all the way along the road. This is all about the following currency's failure rather than super dominance of the dollar, particularly the Eurozone and the yen. For example, if we have a look at the Aussie dollar, you will see that in fact the Australian, which is the base currency, one Australian, is buying you more dollars since January. So this is the power of the commodity bid, and you can see the same with the USD CAD. It's the other way around, but generally the USD CAD has strengthened during this period. You are getting a bit of a bid now with that rally on the Dixie at this particular point, but that is quite a strong sell-off. So it's not been omnipresent dominant against all currencies. Remember, we are in the USD Korean won. We are also in the USD Hong Kong dollar, which we expect to have a failure of peg. So all of those things could be very, very beneficial, and they have also been biasing long. So the dollar has been a pretty good hand. That's your Hong Kong dollar trade. Okay, so it's a great time to potentially get some metals. It's a great time to get your commodity longs, but expect a final flurry, and the final flurry could go on a bit. It could be quick, it could just do the 100 and slump back, or it could be slow, do the 100 and then hold and surge for a while longer. It depends how much that horse carries momentum for. But at some point, I think some little rest is due. But in the longer run, taking you back up to the macro, euro failure is being dictated by this Dixie chart. Let's go to the other one that we like. This points to 110 to the upside. It may not get such a long rest after running the 100. But we will highlight, last time you did, this is what you got. By the way, that ran up to past 102. So you can run a fair way on that rickshaw boy, but you had pullbacks at the end of each one. And that's something to bear in mind. And it is such a clinical number of significance. I would expect some degree, as we were highlighting in the orange line, for that to occur again. So, what did you learn today? You learned that understanding the direction that the dollar is making will have material effect on a number of other markets, including commodities, other FX pairs that are against the dollar, and of course Bitcoin and the risk on, risk off realm of world. As a result, doing good charting and having a great model and staying with your winners when they are right. Look at the trades we gave you against USD JPY and the 6 macro trades. YouTube in September last year. Now you are 6 months later. Every single one of those is up substantially. Euro Swiss franc down. Euro USD made target on the downside, even though we expect further downside performance. USD JPY is on a ripper. We expect further upside performance. USD ruble, job done, blow off and get out, because actually the ruble is less indebted, backed by gold and oil, commodities long time to rule. Commodity currencies will show relative strength to even the dollar and a number of other pretty firm currencies as a result of the fact of the macro commodity cycle that is coming now. Even with massive demand hits, we will not be able to rein in this level of inflation. Okay, so don't forget, go to themarketsniper.com and book a chat if you wish to become a community member to understand the core basis. Getting your biases right on a key piece like this stops you from putting on the wrong trades, also helps you with timing. It's a good time. I'm going to go check in with my precious metals bullion dealer. Catch you later. Likes and shares are real currency. Are we accurate? How far does the Dixie go? We're saying 110.9 at least, and possibly more as it continues in that channel. Where do you think the final top out number for the Dixie is? Remembering that it's being measured against the weak currencies that we've mentioned, largely European ones. Where's your answer for the Dixie? If you want to tell us what your best bid for gold is, how high before Bretton Woods Mark II? Will it be allowed to trade on the paper markets? How high for gold and silver? Share your thoughts on that. We like and read all your comments. Thank you, and we'll catch you next time.